What if I told you the US dollar has already lost massive amounts of purchasing power? Not once, but multiple times throughout American history. And no, it didn't happen because the country disappeared. It happened because inflation quietly made every dollar buy less than before. So if the dollar keeps losing value,
in the 70s,
what actually happens to your money?
Simpler.
Let's break it down.
Prices started
First,
creeping up.
let's clear up a
By
common
the 90s,
misconception.
everything
A
was
dollar
moving
collapse
faster.
doesn't necessarily mean cash becomes worthless overnight. More often, it means your money simply buys less. Think about it. A gallon of milk that cost 50 cents decades ago now costs several dollars. A home that once sold for $30,000 can now cost over $500,000 in many cities. The dollar still exists, but its purchasing power has steadily declined. History shows that periods of high inflation have repeatedly reduced the real value of cash savings. So what happens if inflation accelerates? If you keep all your wealth in cash, its buying power slowly erodes its buying capacity. Your savings account might still show the same balance, but that money purchases less food, less fuel,
Gold
fewer
remains a
vacations, and
secure
fewer
asset.
investments.
It ensures
Meanwhile,
stability.
some assets often respond differently. Stocks represent
Let's look
ownership
at
in
these
companies.
yields.
Real estate provides tangible property.
This looks like a
Gold has
solid
historically
plan.
been viewed as a store of value
Achieving
during periods of
balance is
uncertainty.
key.
And certain
must
inflation-protected
diversify
government
our
bonds are
assets.
specifically designed to help
This
offset inflation.
minimizes risk.
No
assets.
investment is guaranteed.
This minimizes risk.
But history suggests that diversified
Markets plunge as
assets
panic
have often held up
spreads.
better
A
than large
diversified
piles of
plan
cash during
ensures
inflationary
security.
periods.
This is
Here's the
worst
important
crash
part.
in decades.
When people hear scary headlines, many
You are in
panic.
safe hands.
History suggests that panic is rarely a good investment strategy. Instead of asking, how do I hide my money? Ask, how do I diversify it? Financial resilience isn't built through fear. It's built through balance. Maintain an emergency cash
This looks
reserve,
like a solid
invest
plan.
consistently over time, own a mix of assets instead of relying on just one. The goal isn't to predict the next crisis. It's to be prepared, no matter what happens.
We are building
The
a
biggest
bright
risk
future.
isn't always that the dollar disappears. Sometimes
step
it's
counts.
quietly losing purchasing power while your money sits still. Smart investors don't try to
future
predict
belongs
every
to
headline.
those who
They
see
build
it.
portfolios that can weather
Every
many
rise
different economic
begins with a
conditions.
single
If you
vision.
found this
We
helpful,
are just
subscribe for
getting
more
started.
simple, fact-based money lessons that help you protect and grow your wealth.